Good afternoon, ladies and gentlemen. Welcome to the TRACKWISE Designs PLC investor presentation for the final results. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once these are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Philip Johnson, CEO, Mark Hodgkin, CFO of TRACKWISE Designs PLC. Good afternoon.
Good afternoon, Paul. Good afternoon, everybody. Thank you for attending. TRACKWISE Designs PLC, as Paul said, we're presenting here the 2020 financial results. Hopefully you can see these slides. So, TRACKWISE Designs PLC. TRACKWISE is an established UK manufacturer of products using printed circuit technology. So we're here to present you our 2020 results. Our vision is to be the preeminent interconnect partner to the world's leading innovators. So this is being delivered by two divisions: Advanced PCBs. This is the foundation for our business. It's advanced printed circuit technology, not high volume generic printed circuits. And also improved harness technology, or IHT. This is our driver for growth, and we'll go on to describe both in greater detail. So, advanced printed circuit boards. So, Stevenage Circuits, which we acquired in April 2020, is a business formed nearly 50 years ago. So, the business manufactures a full suite of advanced printed circuit boards to a wide customer base, a few of which are highlighted here on the right. Iron Science Limited, a UK manufacturer of gas and leak detections and gas detection sensors, has been a customer of Stevenage Circuits for many years. Their business is growing strongly. We believe we've acquired a good business at a keen price. Mark will describe the very positive contribution of Stevenage Circuits to group performance in due course. Improved harness technology. Improved harness technology is the manufacture of a length unlimited multi-layer flexible printed circuit. So this is proprietary patented technology. Improved harness technology, or IHT, has been developed as a replacement for conventional wire harness, with the main benefits, but certainly by no means the only benefits, of reduced weight and space. Flexible printed circuits is a proven multi-billion-dollar global business with application typically limited inside a box or equipment. That limitation up until IHT is a result of supply chain limits as the size of the product they can manufacture. So TRACKWISE Length Unlimited, and we'll show you some examples of the long circuits that we're making, now therefore has released the benefits of this proven application from just inside a box to box to box. So therefore for aerospace at fuselage level, at wing level, and as the main benefit of reduction of weight, and for any mobile application, weight is fuel, is cost is carbon. So the carbon saving benefits for mobile application is clear. The main target markets, electric vehicle and aerospace, which we say here, are both undergoing fundamental change, and also medical, and we'll go on to describe these in some detail. So electric vehicles, I think we're all fully aware that the automotive is going through a fundamental change. Internal combustion engine being replaced by electric drivetrain, largely with regulatory change driving EV adoption. In electric vehicle cells, and these are the individual, typically cylindrical cells, the image on the bottom right here. These are built into battery modules, in turn built into battery packs and assembled into the vehicles themselves. So these battery modules and these battery packs tend to be, as shown here, broadly rectangular blocks, and these are ideal use cases for flexible printed circuits. So the individual cell connection points are large in number and in highly highly defined, highly repeatable locations. So really ideal use cases for flexible printed circuits. So we'll go on to describe the supply agreement with the UK electric vehicle manufacturer in just a moment. But the wider opportunity is the developing UK and European EV supply chain. As we say here at the bottom of the slide, the UK gigafactories that are being planned, are being discussed, will be producing cells, and these will be built into UK battery modules, UK battery packs, and in turn into UK electric vehicles. So the wider opportunity outside our existing contract is to get between the output of these gigafactories and the UK electric vehicles. So since probably we last presented to you, TRACKWISE have got a number of active discussions with a growing number of electric vehicle OEMs and tier one suppliers. And this really gives us a very strong belief that flex printed circuit boards are to be used widely as a battery pack interconnect solution. So that has been a positive development. So we're now on to talk about the 2020 final results. So as a highlight, clearly we've all been affected by the pandemic, and TRACKWISE has been no exception. As manufacturers, we've been unable to work from home, and our staff have been very resilient in coming to work throughout the pandemic. But there have been a number of impacts. We haven't been immune to it. So, in spite of that, 2020 will go down as a very successful transformational year for TRACKWISE. We had 2 successful equity fundraisers, and thank you if you participated in those. The first of those were to acquire Stevenage Circuits, which we talked about, and the second one, in result of the multi-year manufacturer and supply agreement signed in September, was to go and build a scale-up facility, and we'll go on to talk about that in more details. So, 2020 was a successful strategic year. We've successfully implemented Stevenage Circuits into the business, transferred our RF production from TRACKWISE into Stevenage, really allowing us to focus here in Ashvale on the improved harness technology. So Mark will now go on and talk a bit through the numbers for you.
So for me, the year was defined by 3 things. First of all, the Stevenage Circuit acquisition, then the equity raises, and finally the EV OEM contract. And the year saw us able to integrate Stevenage Circuits, which led us to achieve revenues of 6.07 million for the year, significantly better than the previous year, but obviously that includes 3 quarters of a year from Stevenage Circuits, so it's not strictly like for like, which I'm sure you're more than well aware of. EBITDA of 770,000, which was less than we'd like. During the year, COVID did impact upon both TRACKWISE and Stevenage Circuits, particularly in the second quarter when the lockdown was at its most powerful. And a number of our customers closed down for a significant period, which reduced revenues. And that impacted on lower revenue than anticipated, and inevitably on lower EBITDA than anticipated, and contributed to an operating loss of just £190,000. It's not really much of a credit to say that we had net cash at the 31st of December of 11.35 million, having just raised 12 million from the market in the last 2 weeks of December. Looking at the P&L account in a little bit more detail, big number there really for us is the acquisition profit, the negative goodwill arising on acquisition of 1.6 million. That reflects the fact that we paid a significant discount to net assets for acquiring Stevenage Circuits Limited. With that came some acquisition expenses and some integration costs, which are listed separately there. And I would draw your attention as well to the taxation line. Both Stevenage Circuits and TRACKWISE Designs have significant R&D tax claims each year, which is a big contribution to our funding, and contributes to at least 30, if not 35% of our R&D costs during the year. Then looking at the balance sheet, You can see the big number there is the cash, and again, that's all to do with the fact we had a raise in December. You can see the increase in our intangible assets during the year of approximately 2.2 million. That's investment in IP and associated assets to do with the IHT product. And then really the rest of it is pretty much as you would expect. Not a lot of change from last year, a bit of change around the working capital because we've consolidated Stevenage Circuits in there, but dominated by the cash number and by the IP assets. Moving on to the cash flow statement. Again, sort of top third, changing working capital. Looks like some big numbers in there, but that really affected the consolidation of Stevenage Circuits, which went in last year's numbers, so it makes the movement look large. You can see the purchase of intangible assets there, 2.2 million, and investment in property, plants and equipment of just short of 1 million. And then further down the page, you can see the cost of acquisition of Stevenage Circuits there, low down. So current trading. Well, at the present time, we have healthy interest levels and a growing pipeline. The revenue for the first 5 months of the year amounted to 3.1 million, and last year that was 1.9 million. Now, last year's number doesn't include the first quarter for Stevenage Circuits, so again, they're not exactly like for like, but it's pleasant to see some growth. 309,000 of the revenues came from the IHT division, and we'll talk later. We expect the IHT division to be less than we thought this year, following the news that we announced this morning, but we still expect the IHT division to have its best year ever. Our total order book at the present time is 4.9 million, of which 2.6 million is for delivery in 2021. And to give you some colour as to where those orders are coming from, I thought I'd just break a few of them out there. So we've got some work for our EV OEM of about 547,000 to do this year. We've got work at Stevenage Circuits of about 2 million to deliver. We've got some work on the nuclear fusion customer we have, which will be actually built in the first half of the year, 170,000, and some work in the space industry as well. So we've got a fairly wide range of business now, and 4.9 million is the largest order number we've ever had as a company. We have had impact from COVID for delivery of both IHT and for advanced PCBs, and we think we're through that now. Order books are increasing, revenues are increasing. They did slow down in January, February, March time due to COVID, but they're beginning to get back up to speed. And we budgeted for those slowdowns, so we're broadly on target at the end of May. And then looking forward to the rest of this year and next year, we see some additional revenue streams from the UK EV OEM contract, and also associated business from other companies who have a similar demand for the battery management systems that we're working on with our EV customer. We're still very hopeful that we'll be announcing some medical news. We've had a little bit of good news, which we announced a month or two ago with Cathprint, but we're still hoping for more in that regard. And we're also hoping for some significant growth in doing business with a Belgian company on some electromotor windings. The PCB division, just to finish off on where they are, it's been cash generative since we acquired it, and it's worth, my estimation is that the 1.6 million that we paid for the business last year, we will have had all that money back not long into 2022. So we'll have the payback in about 2 years, which I think is a very acceptable payback for the acquisition of the company. Business is growing, order book is growing, activity is growing, and we are recruiting additional staff to meet that production demand, and in particular to staff up for a second shift, which we hope to start in the near future. We have had some short-term business delays due to global shortages of copper laminate from DuPont. That has caused some delay with our major customer, Iron Science. We haven't lost any business. Business has been pushed a little bit to the right, unfortunately, but the customer has worked with us. They've been a customer of ours for 30 years, and they are looking at alternative laminates so that we can move them onto a new laminate, so that we're not impacted by the DuPont problem. The DuPont problem emanates from the closure of a factory in the United States and the establishment of a new factory, and they've just made a bit of a mess of it, to be honest with you. We haven't lost any business to our competitors. They're all in the same boat as we are, and overall we think that it will be a positive to us in the longer term, because I think our relationship with customers has strengthened rather than weakened. And then just finally, pipeline and outlook is good for the Stevenage Circuits business. Got a strong customer base, and we've got a lot of end markets, and we're benefiting from some of the issues you've seen in semiconductors.
Yeah, so the TRACKWISE announced in September of last year that we'd secured a 3-year product manufacturing supply agreement with a UK EV OEM, as we described then, and I reiterate that this is a transformational deal, and one that's been further strengthened by the addition just today of a further contract year, taking the face value up to more than £50 million. So the OEM is building electric vans and buses as well as other vehicles. All of these vehicles are based around a common battery module, into which TRACKWISE is providing 2 key components. These components are a power flex and a balance flex, so part of the primary power collection and the balance of the battery management system, roughly 1 foot in square. But as part of our IHT enabled roll-to-roll manufacture, we are manufacturing these in rolls in a machine intensive manufacturing process. The OEM is well funded, having completed a SPAC in March of this year, and is to be building its vehicles in modular microfactories rather than a single centralized location. These are relatively small facilities built close to the end customer. There are two currently being built in the UK, 2 in the US, and 1 recently announced in Spain. Like any startup, the OEM has been subjected to growing pains, possibly exacerbated by COVID, but and consequently our progress in 2020 has therefore probably been slower than desired. The supply chain contract has been based around guaranteed minimum volume for the contract years, and it's this guaranteed minimum contract which derives the 54 million value. The contract contains some standard supply contract terms and also compensation payments in the event that the guaranteed minimum volume is not met by the customer. We have waived our right to the 2021 compensation payment in return for the additional contract year. Fundamentally, our start of production has been delayed by 1 quarter. This is disappointing, particularly as the quarter then falls outside our current financial year. But I would see it that we're at the start of production with a very exciting OEM with huge opportunities in a rapidly growing market. So we've worked very hard to get ourselves into this position, and we feel that we're a very key supplier to this exciting OEM, and we're certainly delighted to be that. I, for one, am disappointed but probably stoic about this 1 quarter's delay. And an additional contract year valued at £18 million is, in my opinion, a good trade. The capability that we've developed at Ashvale and implementing at scale at our new facility in Stonehouse has direct applicability across the sector, as I've already described. We have supplied products to and are discussing with both tier 1s and OEMs across the sector. So Ashvale, where we're speaking to you today, was always intended to be an engineering-led product development, new product introduction facility. So the scale of the UK OEM contract, the fact of the guaranteed minimum volumes, the wider supply chain opportunities, as well as our need to make progress with the myriad of other IHT opportunities, means that we've needed to secure additional manufacturing capacity. For this reason, as Mark described, we've identified and purchased a freehold property in Stonehouse, Gloucestershire, roughly 20 miles south of Tewkesbury. So this site is going to implement a scaled up version of the roll-to-roll manufacturing capability that we have developed and qualified in Tewkesbury in an arrangement set up for high volume, low mix, rather than the low volume, high mix that we have implemented here in Tewkesbury. The facility is larger than we necessarily need for the start of the OEM production. We are implementing in the current investment round an excess of the current OEM volumes, but we're planning in the layout of the facility to make sure that we've got capacity for future expansion. So either with the existing OEM or with other OEMs. So as we've advised, we plan to be fully operational in Q1 22. We announced that we had hired an experienced COO, Steve Hudson, who's come from Williams Advanced Engineering, and he is tasked initially to set up and get underway in this in Stonehouse. And as I say, Tewkesbury site will continue to focus on developing the pipeline of IHT opportunities. So the medical business. So again, we're seeing a considerable pickup in activity here. We announced last month, was it March, the signed contract with Cathprint. So this is a Swedish developer of advanced catheter products. There's an image of one of the circuits there on the right. So these are new products, so have to go through regulatory approval. So that the contract provides for 2 years of development, followed by 5 years of production. And as with all of the customers, and the opportunities that we're pursuing in medical catheters, the production volumes are in the orders of 100,000s, so or even more. So these are very large market opportunities. As with all IHT customers, we're somewhat at the mercy of our own customers as to their rate of adoption. The US medical OEM, we'd possibly hope to have advanced further than where we are today, but that is certainly a live opportunity. And as I've said, we've got a growing opportunity. I think literally today we've shipped parts to both a Spanish and an Israeli customer for medical catheter parts. So as Mark has said, there is potential for significant progress for catheters here. Aerospace is where the journey started, and whilst the sector has clearly been badly hit by the pandemic, the main impact has been on the suppliers who are supplying to the existing programs, the existing A320, the Boeing 787 programs, and whereas TRACKWISE we are working on probably on the developments of more electric and all electric aviation. So Melrose PLC, the owner of GChem, as a matter of public record, that they are conserving cash in response to the pandemic, but also that they are committed to their continued development of their technology for future more electric aircraft, of which TrackWise's application is just one. This is a UK PLC funded R&D program, an indication of the quantum of contribution from there, and that is definitely underway. So the route to GCAN is one, but certainly not the only, but probably the primary route into mainstream aviation. However, we're working with a growing list of OEM suppliers for a wide range of new aviation models. So all electric aviation, business jets, and also these high altitude pseudo satellites. So it takes its time, but the GCAN-led consortium is a key one in qualifying our technology for future use, and we still think it has a major opportunity in aerospace, and that is where our patents are filed. Outside our three verticals, I just wanted to include the examples of a couple of other opportunities that we're pursuing. Mark mentioned nuclear fusion as being a chunk of revenue in 2021. The image on the top right, which has just taken a couple of weeks ago, is the largest circuit that we've manufactured to date, a 72-meter long circuit for the nuclear fusion customer. And we're absolutely certain that, as we can be, that there's not another company in the world who can manufacture these products. Now, I'm sure some of you might be saying, well, who's going to need a 72-meter long product? Well, the nuclear fusion customer does, and the point is that it is testament to our length unlimited and a length unlimited capability, and that really is our key offer to the market. I said to you earlier that the typical supply chain limit up until now and up until IHT had limited it inside a box, and really we're now saying to the market, have what length you like. So we haven't yet used this in marketing material, but we certainly will do, and this will definitely get coverage on a worldwide basis. So roughly 250,000 of revenue in 2021 with the nuclear fusion customer. As they scale up to production, which is going to be in the medium term rather than short term, the orders of the order of magnitude will increase significantly for TRACKWISE. As Mark also mentioned earlier, advanced motor windings. So these, instead of using individual wires to be wrapped around a permanent magnet, our customer is using flexible printed circuits, and these are effectively just parallel wires that TRACKWISE is printing and etching in the circuit. And this has a twofold benefit. One is through clever software, the customer can design very good motor performance, and importantly can assemble these motor windings in the fraction of the time that is taken using conventional technology. So this is there are clearly a very large numbers of motors made on a worldwide basis, and this is a very, very interesting and exciting opportunity for us. So really, in summary, TRACKWISE's vision to be the preeminent interconnect partner to the world's leading innovators. It always sounds like a grand vision when I read it out, but I believe we're taking steps along that journey. The first large contract win, we certainly don't think it's going to be the last contract win with an electric vehicle OEM. That was 38 million when it was announced in September. Is now been extended one year to 2024 and up to 54 million. And if the OEM delivers on their expectations, it could be considerably north of that. So in summary, we think we've made very good strategic progress in 2020. We bought a very good business at a great price, and that business has certainly enhanced our group capability and capacity. So clearly 21 has been impacted by COVID, and also, as we've declared, customer startup with in EV. But the growing pipeline, the really growing pipeline, I can't emphasize this too much, means that we are fully confident of further progress, prioritizing our three primary target markets, each of which are very significant verticals in their own right, and also will present a natural hedge to each other. Yeah, so I think that's it. Yeah, thank you.
That's fantastic, Philip. Mark, thank you very much indeed for the presentation. Ladies and gentlemen, please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Mark, Philip, we received several pre-submitted questions from investors, and perhaps I could start off the Q&A session with those. The first one reads as follows. What connections have you been able to make with UK Government Department of Trade re-trade visits overseas, particularly to Asia and the US markets?
Thank you. Yes. Well, clearly there hasn't been too much of that in the recent months, but I've visited South Korea as part of a UK trade mission, and I have been to the US on on several aerospace missions, and certainly one of those was to Carolina to go and meet Gulfstream, and our relationship with that has followed from that, directly from that meeting. So yes, it's unfortunately we're having to do our marketing via Zoom rather than face to face, but that certainly has been a useful a channel, and I'm sure will continue to be a useful channel once we've done that. So.
That's fantastic, Philip. Thank you. The next question we've got here is, what personnel in the company are dedicated to overseas marketing?
So we don't separate between domestic sales and international sales, and we have a small sales team. Really, I think sort of 5.5 in the overall business. What we are tending to find is, or the strategy we're taking is to put quite a bit of effort into our PR, into our collateral on our website, and we are finding that our website is our best source of sales, and clearly the web faces the whole world, and I think medical catheter companies finding us from Spain and Israel, and connector companies finding us from Germany. That's an example. So a dark matter, the University of Texas finding us on a dark matter experience. So certainly we think the web is our main source of overseas sales. So yeah, I hope that answers the question.
Philip, thank you very much indeed. That concludes the pre-submitted questions. Obviously, we've had a number of questions submitted by investors during the presentation today. Perhaps I could hand back to you, and you could read out the question and respond to it where appropriate to do so, please.
Yeah, so I'll start with one from Martin S. So Martin, TWD, TRACKWISE Designs, has previously reported on the negative impact on your customer Sprint with T-Mobile. Does it continue to impact your business with Sprint? Well, I think the Sprint T-Mobile merger has now, is now fully, Sprint is no longer, was part of T-Mobile. So I think that doesn't, I think the short answer to your question is no. The RF continues to be a part of our business. I don't think it's an emphasis of our business. We've transferred it to RF. It's a highly commoditized global business, and the margins aren't what we can achieve through the advanced PCB division, well, through the wider advanced PCB division, and certainly not with the IHT division. So whilst we do continue to supply products indirectly to T-Mobile, it is, I wouldn't say, is one that is going to move the dial with the business. So we've got two questions, one from Chris G and the other one from Graham F on the cash position. So Mark, shall I read them out, or shall I summarise? Or do you want to summarise?
Basically on the cash position. So in the RNS this morning, we disclosed that was net cash of 2.866 million. And we probably didn't word that as well. I've said this to our advisors. We have gross cash of equivalent to 7 million. So the net cash position doesn't show it in its full light. But we did say when we raised the money in December that we would be using HP finance to assist in the capital expenditure, and that will increase over the year. We have also bought a property, which we hadn't planned to do. That cost us £3 million. However, we have got an approved mortgage from HSBC, which will return £2 million back to the business. We've saved a significant amount in terms of operating costs as a consequence of buying the property rather than renting a property. The rent we were being asked to pay was nearly £500,000 a year, and the interest charge and capital repayment, well, the capital repayment doesn't hit the P&L account. The interest charge for the mortgage will be significantly below £100,000. So we decided that buying the property was a good idea because it gave us future proofing, and it was a less of a drag on the P&L account. But it has consumed a net 1 million of cash. So Then we've placed significant deposits on CapEx over the last few months. We're in total, we're going to spend £9 million over the whole year. We will use HP Finance to get a significant portion of that back, but we have to put the cash out first to secure the machine and only refinance it and get the cash back when the machine is delivered. Those machines will start to arrive on site, hopefully in August. No, we haven't heard anything to the contrary. And at that point, we will see the cash position recover somewhat. Then, of course, we weren't aware until very recently that we would move the EV revenues into next year. And that obviously will have an impact on our working capital. So not surprisingly, I've spent an awful lot of time forecasting the business, and the auditors, I can tell you, have spent an awful lot of time on looking at those forecasts of the business. I'm confident that over the next 12 months, we've got enough cash. At the minimum, we will have 1.8 million of cash, providing we operate to plan, of course, and we will have unused banking facilities of £1 million, giving us effectively headroom of nearly just under £3 million at the worst point, which will be in December of this year. Again, if we execute according to plan. So so happens it looks as if we spent a lot of money. We have spent a lot of money, but a lot of that will come back when we finance it, which was our plan in the first place. Thank you.
Thank you. And I think there was another question I saw about a further fundraise. Maybe that's been withdrawn actually, but I think that question was answered. So one from Alan F. How confident is the company that material revenues will be generated in H1 22 from the UK EV manufacturer and the further delays won't occur? I think very confident is the answer. You speak to we obviously speak to the OEM on a regular basis, and they certainly are confident in their capability to deliver these volumes. They've taken their time to look at having revised the contract once. They've taken the opportunity to look at these carefully and have signed up to them. So I don't have visibility of their build schedules, but we have a good working relationship, and on that basis, I would say that I am confident. Just seeing whether are there any other we can group? Yeah, just going to see whether just trying to group them, but okay. Last one from Andrew M. If the minimum guaranteed minimum values are not met, how exactly minimum compensation payments calculated? I think probably that's a matter of confidentiality, but there's a formula
based upon volumes announced to us in their schedules, and the aim is to recover the lost gross margin.
But I think the precise method of calculation, I think, probably is something we wouldn't want to disclose. Alan F, what competing technologies to IHT are other EV battery companies using, and what are the main cost performance differences? So, as I highlighted to you in the presentation, we are seeing flex PCBs and variants thereof being used very widely in the EV industry. So, it is also possible to use bus bars and to use wire bonding. So there are alternative technologies. So I think the advantage of that is that possibly it's cheaper. There's certainly the disadvantage is that it's slower to manufacture. So I'm afraid our trade-off of the different solutions is somewhat limited. But as I say, we have good visibility that this technology, the flex technology, is being used widely on a worldwide basis.
Martin S, what is the highest level of management, excluding CEO and CFO, with accountability for risk and exposure to cyber issues, e.g. ransomware, hacking, etc.? Well, I have board responsibility for it, and we have 2 or 3 people in the organisation. The plant manager, the general manager at Stevenage reports to me on these issues, and we have a manager here that reports to me on these issues. But I take quite a keen interest in that. This is a high level of risk for us, It's a high level of risk for all companies these days. We're constantly warned about the dangers. So we will be putting in quite advanced protection for our new sites when it's up and running, because a lot of these machines will be running off, through software which is potentially hackable. So I am the highest level employee. I know you exclude CEO and CFO, but we're a small company, and I know everyone in the company.
We're saying we have Cyber Essentials Plus, which is certainly not foolproof, but is I think the industry benchmark for cyber protection for companies of our size. Question from Greg W. How do you or could you avoid being dependent upon DuPont? Would it be wise to consider a dual supply arrangement to avoid this issue in future? Certainly yes to the latter question, Greg.
What's not being supplied by DuPont is a product that is specified by our customer.
Yeah.
So we're trying to persuade the customer to change his requirement or their requirement for that laminate. So
a printed circuit board is a bill to print, and that includes the specification of the material. So I think our customers have probably been a bit complacent in having a sole supplier on their bill of materials, and I've said elsewhere that I think DuPont are going to be quite a loser out of this, because people have had a shock and are realised that they're reliant. So dual sourcing is the main solution. Jeff J, what is the maximum current capacity of your existing IHT product range? Maximum current capacity is really just a function of cross-sectional area of copper. We have implemented a 240 amp solution for a supercar application. One of the benefits of that of a flat flex versus a round wire is that you get a much greater surface area and therefore greater heat rejection capability. So in theory we can go higher than that, but it starts to be not really to be flexed. But yeah, 240 amps. Martin S, does your patent protection extend to each of your market applications? Martin, we filed and had granted in our patent in all of the main airframe and manufacturing locations. So when I filed the patent in the early part of the 2010s, the focus was on aerospace. So therefore we have the patents have been focused around airframe manufacturing locations. However, what I would say to you about that is that the knowledge, the know-how, which is intellectual property, the know-how that we have gathered, throughout the business since then is infinite in comparison with what we knew about when we filed the patent. So I wouldn't necessarily focus on the patents, and really our manufacturing know-how is really our main competitive advantage. Clearly, we can send somebody a cease and desist letter if they're potentially infringing our patent, but that is it. So Jeff H, that's a fairly broadly similar question. Some discussion on competitions in the IHT, some discussion on competitors in the IHT area. I think in one of my slides, I think we've said that no change is the biggest competitor. It's always easier particularly for a conservative industry for no change. So, and I think this is why an aeroplane and a car are wired in fundamentally exactly the same manner as they have always been. So, in the printed circuit space, there are really just a handful of competitors on a worldwide basis who overlap some of our capability. But again, I showed you the nuclear fusion one, the 72-meter long circuit, and I genuinely think there's nobody else in the world who can make that. So it's not a simple question. There's a broad overlap, But as I say, as I answered in terms of the previous question, our know-how is, that is within the DNA of everybody in this business is our main competitive advantage.
Answer Tim H's question. Can I just acknowledge, Tim? I think it's a really good question, and I will discuss it with the people that we do write the RNSs with, because your sentiment is quite right.
So should I read out the question? Can I ask who writes your RNSs? My view is that your company has a great story to tell, thank you, but the release today dwells more on the deferments rather than the message. It's just 1 quarter deferment and the trade-off the extra year. Sad to see its impact on the share price today. It's a shame as sentiment is so important for small company share price. Thank you, Tim, for your message, and we share that.
As far as Quentin B's question, the market evidently took today's results badly. Will any of the directors be treating this as a buying opportunity and a chance to demonstrate their confidence in the future? I'm afraid I'd be breaking market abuse rules if I answered that question, but I understand what you're saying. The next question from Quentin: is there any danger that R&D tax credits might be withdrawn? There was talk a couple of years ago that the government would withdraw R&D tax credits in 2022, but over the last 12-18 months, given what they're trying to do to pump prime the economy and stave off the impacts of COVID, there's been no talk of R&D tax credits being withdrawn. But I dare say in the longer term they might be, but I have no visibility on that.
Is supply chain stress an ongoing problem, or is it beginning to improve? How will this impact the EV OEM business?
It's fair to say that the supply chain stress we've had has only really been around the DuPont issue we talked about. We haven't had any difficulty in getting product for the rest of our business, although lead times have gone out a bit, but we've adjusted to that now, and we're just ordering sooner. We have seen a lot of inflation on material costs, most of which we've passed on to customers.
Yeah, so I think the advantage of a long-term agreement is that you can have a long-term agreement with your supply chain, so it's been dealt with in that manner. So Chris S., how can you talk about the gross margin of the business?
We'd rather not do that, Chris, simply because it's not the sort of thing you want your customers to know.
And on that note, guys, you've been very generous with your time, and you've answered every single question we've had through. Just to remind investors, if there are any further questions that do come through, the company will, of course, have the ability to review those questions and publish any further answers on the Investor Meet Company platform. Philip, perhaps I could just ask you for a few final words to wrap up before we redirect investors to give you some of that important feedback.
Thank you very much. Yeah. So I remain the largest shareholder in the business. Mark has got a substantial stake as well, and whilst a quarter's delay is a quarter's delay, and that's obviously disappointing, it is in our opinion a small blip in an ongoing journey that we're on with the business. So we think, the summary slide is still on the screen. We think that the 2020 was a massive year for the business, and we think we're only just getting going. Certainly as they say, it's the first large contract win. We certainly don't think it's the last large contract win. And to the sellers out there today, I would say, don't be out of the stock when the second or third is announced. But you would expect me to say that. We remain confident. We're certainly working very hard. We think being on AIM is a great place for an entrepreneurial business like ourselves, and we're making significant headway in some important markets. So for the shareholders on the call, we thank you very much for your support, and we're confident of further progress, as it says here. We are confident of further progress. So thank you for your time, and Paul, thank you for the platform to which to air these views. So.
Philip, Mark, thank you again for updating investors today. Can I please ask investors not to close this session, as you'll be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few minutes to complete and is greatly valued by the company. On behalf of the management team of TRACKWISE Designs PLC, we'd like to thank you for attending today's presentation. That concludes today's session.